Alright, so in our last video, we used Goldensweeps to find some stocks, and in particular, we found XOM as a good opportunity. So what you want to do next is you want to double verify this stock pick with trading analysis. So we would head over to Trading View. You can use other trading analysis like from your broker. It's pretty much the similar concept. And the first thing you want to do is you wouldn't want to start off saying in a weekly chart, and then the weekly chart, and then you want to like shorten it as you get zoom into the price. So we can see the price is here, and the support level is about here, and the resistance is here. So we had a drop in March 20th. That's when all the stocks dropped, and then we had another big drop in October the 19th. And we are currently near the resistance line. So what is resistance? Resistance is when the price hits a certain point and drops down and doesn't go higher than that resistance point. And support is when the price drops down and doesn't go lower than the support level. So it kind of like bounces up. And then if the price is between, say, a resistance and a support level, then that is you're in a channel. So there can be many channels inside, but inside this weekly chart, we're in a channel from here all the way to here. So the next thing you want to do is you want to go down to, say, the 4-hour chart. So in the 4-hour chart, the price is near the top. And then you want to hit down to, say, like a 30-minute chart, which is what I like to use. And some of the filters that you can see here is the pivot points, so that helps you draw up the resistance and the support lines. And another one is the 4 exponential moving averages. So the moving averages just basically averages out the price, say over the time period that you've selected. So in this current example, when the blue line, which stands for the 9-day moving average, and the red line, which is the 55-day average, when these two cross, that is an indication that the price is going to change. So we could see here, if we scroll back, that we had the blue and the red cross. And then since then, the price nearly crossed, but it didn't. And then it continued to rise all the way up to this point. And then from this point, the lines crossed and the price dropped. And now we've had yesterday, the lines crossed again, and we saw some price increase. And what I like to use is the Ichimoku, which is to double verify. And then when you have the Ichimoku base and the conversion line crossing, as well as the exponential moving averages around the same time frame, that is a really good indication that the stock is going to go up. But you wouldn't just blindly say, okay, this stock's just going to go rocket up to 1,000. So what you want to do is you want to protect yourself a little bit. So you would draw up another resistance and support line within this time frame, and then if, say, the price drops below this support line, then you could set up a stop loss here, so you wouldn't lose any more money than once it hits, and then you could re-enter that trade. And here is the resistance line. So if the price hits the resistance line, you could take profit, or you could take half your profit, or you could be wary that it might be time to cash in if, say, it hit that line then drop down. So these are good indications of what to do when the price hits. But using the Goldensweeps software, we did see that there was very strong calls for 60 and 58, but nothing really strong for 62, 65, 70 at the moment. So you might like to play it safe, and then when the price does hit around this mark, you might, and if you don't see any further growth on the golden analysis, you might want to pull out. So all this information it's used at your own risk, but it can help you make better decisions in trading in combination with golden sweeps.